And very interesting is part of that includes network protection and cybersecurity. So the inclusion of cybersecurity stocks within our defense strategy, we think, has been validated by this move. So we think that's kind of had an appeal. And at the same time, I think the enduring appeal of the fact that our defense strategy includes only companies which are domiciled in NATO member states or NATO allied states.
Hello, you're watching Proactive. I'm joined by Han ETF Head of Research, Tom Bailey. Tom, great to speak with you again. It's been 2 years since you launched the Future of Defense UCITS ETF NATO. How's that been received by investors?
Thanks, Stephen. Yeah, it's been very well received. It's been 2 years since we launched the ETF. We're about 2.7 billion in assets under management now. We started this year with about 700 million, so it's been very strong, particularly this year. Obviously, investors have seen the going-ons in the White House, obviously the bust up between Zelensky and Trump, and then the fallout of that in the form of the European Union and European NATO members committing large amounts of spending for the future for defense, and this idea of pursuing more strategic autonomy. So that's really kind of skyrocketed interest in defense in particular these past few months. So it's got several different USPs, and particularly if investors are looking at this defense theme from a NATO lens, I think it's very important. So for example, the strategy we have includes both traditional defense, which has performed very well, but also includes cyber defense. So if your listeners will recall, at the time of speaking about 1 week ago, the NATO summit took place in The Hague, and there we saw governments for NATO agree to this new 5% spending target, which is obviously very encouraging. It's sort of what was expected, surpassing now that 2% target. But what's very interesting about this new target for the NATO governments for their defense spending is that it's kind of divided. So 3.5% or 3.5 percentage points are going towards the kind of core defense, your traditional defense, what the old 2% target was essentially spent on. So that's going to 3.5%. But in total, it's going to 5%, with 1.5 percentage points going towards broader defense spending outside your traditional remits. And very interesting is part of that includes network protection and cybersecurity. So the inclusion of cybersecurity stocks within our defense strategy, we think, has been validated by this move. So we think that's kind of had an appeal. And at the same time, I think the enduring appeal of the fact that our defense strategy includes only companies which are domiciled in NATO member states or NATO allied states. So some investors like this on the basis of that certainty around the ability of these firms to be domiciled in allied geopolitical jurisdictions, because obviously typically our investors are European based, but at the same time because it means capturing that NATO defense story, that big increase in defense coming from NATO after years of underspending.
Tom, you recently announced you're launching a new defense ETF focused on the Indo-Pacific region. Tell us more about that.
Sure. So I think one of the trends we're seeing around the world is regionalization of defense. So, we've seen it this year in the form of Europe. Obviously, Europe pursuing what they call strategic autonomy in terms of, building up their own defense capabilities. And all this stems from, the changing role of the United States in the world. So it's stepping back from its role it's played for at least the past 30 years as the provider of this global public good of upholding international norms and the guarantor of global security. And it's sort of stepping away from that, or at least taking a more transactional approach. And so what we're seeing is a bit of a more fragmentation and regionalization of defense and security. So Europe was very much part of that. Now we think we're looking around the world, and we can see that the Indo-Pacific region, we think, is going to be part of this as well. And so, we think it's a very interesting region from a defense perspective for several reasons. I mean, one, if you simply just take the what's defined within that geography, the Indo-Pacific, it includes essentially stretch from the Indian Ocean to the Pacific Ocean and all those countries in between, which essentially surround China. And within this, there's lots of geopolitical flashpoints. We've kind of argued that it's potentially the center of gravity of geopolitics in the 21st century. So, if you consider ongoing competition between China and India, they have both border disputes with each other, as well as competition around within the Indian Ocean for influence there. Then obviously you move a bit more towards the Pacific Ocean, and you have ongoing disputes in the South China Sea between China and its various different neighbors over how the lines on the map are drawn territorially wise. You have ongoing tensions around the Straits of Taiwan, and obviously essentially the future status of the island of Taiwan itself. Does it remain a autonomous, self-governed country or not? And then at the same time, you have the ongoing situation on the Korean Peninsula between the North and South Korean governments. So it's a major area of geopolitical flashpoints, but it's also a major area of geopolitical cooperation now. So if you look at a lot of the alliances, kind of, or at least loose alliances forming, you have Quad, which is that kind of grouping of some of the major democracies in the region. The US obviously is still a Pacific power, Australia, Japan, and India, and this sort of informal kind of grouping. So it's very much a key part of, we think, 20th century geopolitics. But then at the same time, we consider what's the spend been like? There's been a decent uptick in defense spending in the region. But if we look at what those countries are actually spending as a percent of GDP, it's still relatively low. If we look at Japan, it's 1.4% of GDP, right, which is obviously way below, say, the 2% target that NATO countries set themselves over a decade ago. Japan now is committed to reaching 2% by 2027. If we look at Korea, it's a bit stronger. It's around 2.5%, but it's still relatively low compared to where the European NATO members are at right now. And then we look at India, it's sub 2%. We look at Australia, it's sub 2%. So, we'd expect this to start to increase. And it's not just us saying this. If your listeners recall Peter Hegseth, the US Defense Secretary's speech at the Shangri-La Dialogue in Singapore around a month ago, he openly said, our allies, meaning the US's allies in Europe are spending 5% of GDP on defense now, or at least reaching that target or heading for that target. But in Asia, our allies are spending way below. And despite, as he says, this being a much more geopolitically volatile region. And so I think there's this kind of new dynamic that Europe has had, and which has forced European spending up, which is essentially realizing the world has changed. There are more geopolitical risks out there, worried about the future commitment of the US, and then as part of that, pressure from the US for its allies to spend more. So we think there's going to be definitely, big future increases in defense spending in that region. And then the other parallel with the European defense story, we think, is a growing push towards indigenization of defense production. Not quite the same in the same way as Europe, but we can see some start of this, at least in some countries. So, around 70% of Indo-Pacific, excluding China, arms spending is spent on imports, principally from the United States. That's obviously a very high figure. We'd expect that to obviously, a lot of these countries will still maintain their importation of US arms, but we can see movement towards supporting their own industrial production and domestic sourcing. India's got new rules on committing 75% of its defense capital budget to domestic producers. Japan has been providing fiscal support to their industrial firms to boost their domestic weapons manufacturing. And then at the same time, these are slightly different economies in Europe as well. So we can see with Korea and Japan, there's also a interesting shift towards using the export of arms and their defense industries as a means of shoring up regional security. So if we look at Korea, for example, they've set themselves a target of capturing 5% of the global arms market by 2027. Currently it's around 2%. So Korea is definitely looking at this export of defense as a strategy as well. And at the same time, Japan has, since the end of Second World War, been quite restrained in terms of both defense spending, but also in the export of defense products. They've loosened those rules, and they very much see that as part of the strategy for kind of tying together regionally other countries that they view themselves as geopolitically aligned with. So that's what we're trying to capture with this forthcoming ETF. It should list in the next few weeks. Important to point out, Indo-Pacific, who that means, including countries I mentioned, it will have a weighting towards Indian stocks, defense stocks, South Korean defense stocks, Japanese defense stocks, Taiwanese defense stocks, Australian defense stocks, but it will not include exposure to defense stocks from the People's Republic of China. So it's an ex-China strategy. We don't think investors necessarily want exposure to Chinese defense stocks. I think there's too much sanctions risk around there when you look into defense stocks within China. So yeah, we're very excited to be launching this ETF, and it should come out in the next few weeks.
Look forward to speaking to you after that launch, Tom, and I'm sure it'll be as successful as NATO. Thank you very much for joining us today.
Thank you.
That's Han ETF Head of Research, Tom Bailey.